All right, let's welcome Mr. Tornas, a big, strong finance bro.
Sexy.
Normally, when I'm making investing decisions, I'll look at one thing and one thing only. That's usually the technology. That's usually the industry that the technology is taking place in.
Yes, sir.
If we're in, say, the AI industry, then some of the best performing assets are probably going to have to do with data storage, maybe power generation. That's one we've talked about a lot. Mm-hmm. Maybe obviously NVIDIA, who's providing the hardware that's going to essentially run this whole industry. Those are the things that I'm looking at as an engineer. The technology that makes sense, solves a key problem, and sounds like it's going to make a lot of money.
Yeah, it'll run the world.
Yes, that's not always the best way to do things because...
That's half the battle.
Yes.
Yeah.
Because what happens to me sometimes, as you know, I invested a lot of money in, let's say, Enphase, without doing a whole lot of research into their financials, into their management, let's say, like what kind of decisions they're going to make going forward. And I just made assumptions that obviously didn't turn out the best. Today, we're going to try to combine those approaches. And I want to learn a lot from you when it comes to reviewing 10Qs. You said is like a good snapshot.
Yeah, in this case, the 10Q is the most recent statement that gets provided outside of 10Ks.
Yeah, that's the kind of stuff that I want to learn about because that's kind of what I'm lacking. I know a little bit of finance, but not like you, obviously. You went to school for it. You've had a pretty successful career thus far. You've helped me made one of the best investment decisions that I have with MCore. So we're going to be talking about one stock in particular. We won't spoil the name yet.
I almost did before. I'm not even
it doesn't matter. It's PSTG. Pure storage. My perspective is the engineering perspective. What data am I looking at? I like to make data-driven decisions. First thing we got here is the volume of data created and replicated worldwide. We can obviously see that this trend isn't going away, right? And what industry did we just talk about where data is especially prevalent? That's artificial intelligence. Mm-hmm. Large language models intake tons and tons of information, not just on the daily, but per second. Some of NVIDIA's GPUs, they're performing trillions of operations per second. So you can imagine just how crazy this is. This is in zettabytes. So to give you perspective of what a zettabyte is, it's
that's above Tera?
Yes, it's 1 trillion gigabytes.
Holy shit.
So gigabyte, obviously, we think that's a decent amount of storage, right? Like I think an iPhone is somewhat around like 64 to 128 gigs, something like that. Yeah. So that's 1 trillion times. Just to kind of put in perspective how much data we're dealing with today, it's insane. Mm-hmm. And so immediately I think, what's the solution to that problem? Well, we need data storage. Now here's projections. We just looked at, from, what was it?
What has happened.
Yeah, 2010 to 2025, it's obviously exploding. Mm-hmm. But now we're looking at projections into the future. It's going to absolutely blow up. Again, this is in zettabytes. So you can see that we have this massive jump from 2020 to 2035. Mm-hmm. Again, these are just projections. This could change. Who knows?
If they mass adopt it earlier, that 2030 projection could be what 2035's is.
100. You're right, 100%. So we don't know what this is actually going to turn out to be, but right now it looks pretty promising. It looks like CapEx and investment is still moving that way. Mm-hmm. So I don't really see why it would change in a negative way, at least. Pure storage is the one that we're going to be looking at a little bit today. So PSTG. And I guess this is just a screenshot from their website that I wanted to check out real quick. I like the look. It's clean, right? I like just going on a tech website and like looking at like what their app and product is and their service. The highest net promoter score in the industry. Not super important for decision making,
right?
But it shows that the customer experience is good. So the customers like using the app.
If they don't like it, then they're not going to buy it or continue to buy it.
And clearly they recommend it a lot to their peers, so they enjoy it. And I was just looking at this. It reminds me of Palantir in a way. One thing Palantir does so well is they create this all-encompassing environment for all the data. So you can imagine like a big organization, one of their biggest problems is that data is siloed in the different divisions. So say you have like a marketing team, a technology team, an engineering team, all these different teams, right? Yep. They're producing data constantly. In the corporation and the decision makers are like, holy shit, dude.
Like too much.
Yeah, exactly. Yeah. Like how is a human supposed to know what to do with all this? That's what Palantir does really well. They combine it all together.
Simplify it.
Yeah, and create this platform like, hey, this is what this means. This is why we're doing what we're doing, that kind of thing. This reminded me of it. Where I was going is this reminded me of that Palantir platform because it creates this one dashboard where you can see the status of all of the data.
Departments
Yes, of all the data that you're storing, gives you uptime. and all these different characteristics about your database and whatnot.
It looks
So
like more like a KPI dashboard that they have. So
exactly, and I think that's good, right? If you want a place, just a dashboard where you can quickly look and say, okay, this is looking good, this is looking good, sweet. What does PSTG do better than their peers? Because obviously that's a question we want to answer. What's their competitive advantage? What's their moat? QLC flash technology can compress data. Let's say an average flash drive, we have 130 gigabytes of data that we need to store. Well, PSTG is going to do that in 10 gigabytes. So why is that so good? Why does that make them so much better than some of their peers?
Yep.
Well, you could imagine, like, let's just take this example, this picture right here of a data storage center. You can see there's a whole shit ton of things going on here. If you can do this in 13 times less of the storage,
you can get more out of it.
yeah, you can get more for your money. Again, some of the biggest problems when it comes to storage and just like AI infrastructure in general is heating problems, because you can imagine all these components right here are producing heat and they need to be cooled down in some way. And you can store more information, more data. So less heat, obviously less spending on cooling, less spending on power. You're getting more for your dollar. We just said that. 13-to-1 compression rate is what they call it. Yeah, so I saw this. I didn't really read into it much, but I feel like anytime you see a deal with one of these big tech companies,
It's a plus.
also, one other thing about Meta and all these bigger companies, we see today, we just talked about the trend of data storage continuing and this trend of data consumption, production continuing. Clearly, Meta and the big companies believe it too.
Right.
Because they're throwing billions, hundreds of billions of dollars into CapEx.
It's not slowing down.
It's
remotely.
not. If anything, it's accelerating. I'm coming from that technology perspective. The technology looks clean. It has a good user experience, apparently. People like to recommend it to their peers.
Seems like an auto invest.
Yeah, that's what I'm saying. So, and I see that they're signing deals with big companies. I see the trend of the industry is only one way, and that's up. So I'm just thinking, I mean, isn't this a no-brainer?
They're poised for success. It seems
Yes.
like.
So now I want to transition over to looking at the 10Q. You're the big, strong,
Sexy.
juicy finance bro, because you are that guy. Like, what should I be looking out for?
To your point, all these headlines, like them getting a deal with Facebook, or Meta in this case, Facebook, it just, you would think it's going to poison them for success in the future, but you got to correlate it to their current financials and how it's going to actually benefit them in which ways.
And that's the part that I think I struggle with sometimes. So again, we went over the industry. It's booming and it's not going to slow down anytime soon. We looked at the actual problem in the industry, and that's clear as well. I think that's abundantly clear. The technology that kind of gives them that edge. What's their management doing with the money that they're getting? Like, how are they managing that money? That's where I want to look at with you. This is the 10Q document.
Yes.
And you said this is like a snapshot in time of the company's financials. And this is where you go to see things that they're trying to do, and this is what their money looks like right now.
It's more, to your point, it's a snapshot of how they've performed within the previous quarter. It gives you a look at how they're performing within the year compared to the year prior. Current risks, previous risks. There's a management discussion page in here as well that gives you a kind of like management's tone on how they're performing and where they might go.
I feel like tone is such a big thing nowadays too,
you
right?
can compare previous 10Ks, so what their previous quarter messaging was to now's, and kind of get a good sense on different risks. The first thing I usually like looking at is just the management discussion and analysis page. I haven't read any of this, but just from a high level perspective, overview, here's what the company does. Likely that's what they're getting into.
Yeah, maximize. Again, these are just things we talked about, right? Like technologically speaking, they're disrupting the data storage service industry, and they're looking to maximize the value of their data. Again, this would just give you that overall technological perspective, I think.
Goes into the key developments of how they've performed. Then it's just going into the management's perspective of their operations, their revenue. When we look at their financials, this is where you kind of tick and tie. They might even say, if our revenues are down, here's why in this portion.
We are in the data storage industry. Software as a service, you could think of it.
Yeah.
What are the things you would look at in this document to be like, oh, shit, this is probably a red flag. This is a problem.
In the MD&A?
Let's say
or
MDMA, or maybe in general, wherever you want to take it next.
My first thought would be you would have to look at the financials first to understand if there's a problem.
Okay.
So you start at a high level, then break it down further.
What are some of the things? Because I'm assuming you probably looked. Again, I'm not going to make any assumptions, but no, you know what? it, I am going to make an
Yeah.
assumption. You've probably looked at hundreds to maybe, I don't know, 1,000 of these documents. How many 10Qs have you looked at? in your
Probably a
life?
couple hundred, yeah.
Yeah, okay. So you've looked at a lot of these docs from a technology perspective in that realm of technology, high growth, high margins. MD and MA is still the first thing that you go to.
Well, yeah, before, just to get a better sense of a company. Like, so just say if I want to learn about a company from that I've never even looked at, that's probably where I just start to see, here's what they do, here's what the management's thinking about at a point in time. This will still be included on 10Ks, which is their annual statements too. It'll be issued on every statement, really, because it's just their update. So it's just a good starting point to see, here's what they're doing, here's what management thinks. Even if you started from financials and then went to management just to get a feel on what they've performed, it doesn't really matter, but it's just what I do normally. So going from like MD&A, there's really, again, there's no right way to do any of this. It's just whichever way you tell the story better.
You've had success with your investments, so I'm listening.
Go to balance sheet, get a good sense. You get current assets against current liabilities, and you can all extract this information into Excel and then have models do like certain KPIs.
Yeah.
Their total current assets against their current liabilities, that's the quick ratio. Do they have enough current assets to offset their current liabilities? Are they liquid enough? I always start on the bottom line, then go back up. So let's just say here's the comparison between the two. Looks like their cash positions, which is their most... So the way that they do this in order is most liquid assets against least liquid in terms of hierarchy.
So I know, at least from conversations we've had, you love cash, right? When you see cash, you're like, this company
If a company has
like...
a lot of cash, low debt leverage, they don't have a lot of outstanding dues, is the simple way to think of it, and they can deploy their money to anything that they want, more or less. But we can look at that in the cash flow statement as well. Again, looking at the balance sheet here, inventory I like to look at. We'll go down to liabilities, accounts payable. They've received a service but have not yet paid for it. They have to pay it in the near future. You'd like to see that lower. Debt current. Barely have any debt in this case.
And you love that, right? That's when you're big.
Makes me a little...
Love to hear that and love to see that from you.
Doesn't look like they have a really big breakout on their debt structure here. So, I mean, they don't have a lot of debt, which is nice. They have ample cash that they're sitting on and marketable securities, investments, short-term funds that they're likely in money market funds.
So let's go high level again. We just went through a little bit of the balance sheet. I want you to just give the 3 top things. I know it's hard to boil it all down.
Sure, yeah.
The 3 top things that brick you, like get you really, really happy.
God.
the 3 top
There's
things.
a lot of things that get me... It's really easy to do so, but...
But in terms of the balance sheet, dude, I'll give it to the balance sheet.
When I look at numbers, definitely cash balances, debt numbers.
So cash balance is high, debt low.
And then I would say I like looking at inventory, just in terms of like if we're looking at AI in this case, just how quickly can they turn over their product or not. And that's a good indicator. You would kind of correlate the net promoter score to here. People like their product, they're happy about it. Are they moving their inventory quick and at what costs? That's just high level on the balance sheet. Here on the income statement, revenue, cost is revenue, and you can just kind of do a comparison year over year. I mean, this is pretty straightforward stuff, but just kind of like conceptually thinking their subscription revenue is going up. The revenue growth year over year or quarter over quarter, or this year over year in this case, but like quarter over quarter, what is the revenue growing and at what pace? It could just be going up 5% quarter over quarter, but year over year it grew 30%.
So this is my thing. This is the qualm that I would bring out right now. Is to me, it seems like, at least in the technology sector, I know you've made some really good investing decisions when it comes to like mid cap. I think that fundamentals like shine more there, maybe.
Tech, they move so fast.
That's what I was going to ask you about.
Where you can find much more success is knowing the product a lot more, because like their financials at one point in time could look so shit, but their product can go like this and
that's
tenfold,
fair,
which is crazy. But
does it really come down to more so optimism and the projections made by these CEOs? The guidance.
Let's just say as an example, their revenue actually shrunk, but in Oracle's case, they have an estimate going forward.
144 billion by 2030. It's 10 billion today.
Yeah.
More than 14x in 5 years.
It's really their forward guidance kind of like shines over what they've performed in the past.
Let's connect the dots with that. Let's say we're looking at a tech company, a software as a service company. Let's say their management comes out and they're like, hey, we grew 20% year over year, 2025 to 2026.
Revenue?
Yeah.
Sure.
And now they come out and, CEOs generally want to hold this very like optimistic tone because they want to please shareholders. What if they came out and said, hey guys, we're projecting to grow at 40% year over year next year. So they are accelerating growth.
Sure.
So you might think immediately, that's a little fishy, right? Like what's happening?
Well, like what we said, like I would try to correlate that to how are they currently positioned and how are they going to do that.
In this exact case with Pure Storage, they said they're going to grow, let's say 40% year over year going forward. What is the thing you immediately go to be like, is that possible? Like, could they actually? Because at the end of the day,
right here.
Research and development,
Yeah.
That's what it is.
From what I've seen, is most cases it's are they investing a lot into R&D to then therefore bolster their revenues, or are they investing into research and development for like their product to then have a more efficient like hard drive to make it from 130 gigabytes to 1.
Just because, there's different stages of growth, right? So like you could be really early, like we talked about, like losing a shit ton of money, but your product's just really good and you're seeing big revenue growth numbers, but you're still losing money because you're investing so much into R&D.
Yep.
Is there a point where you're like, all right.
But are they burning money faster than they have been in the past or slower? And then you would have to look at for what reasons. You come in here and look. Let's just say they were losing $1 million 5 years ago. They're losing $10,000 now. Their revenue has increased 20%. Cost of revenue actually increased by 15%, but their margins increased by 5%. You got to look at a lot of like perspectives of the story as it goes.
We didn't do too much research into this company. Again, I looked from a technological perspective. It looks good. We looked from a financial perspective. Looks pretty good. I mean, you didn't do a thorough analysis. No. I'd be interested next time to do a little deeper dive in that area. Yeah. But I think like what you had to say about just where to navigate, what to look for, the things that actually matter, like that stuff's important to make due diligence decisions like this, right? You have to consider all the different aspects of making an investment, because at the end of the day, there's a lot of factors that plays into it more than just like, hey, the technology seems promising and it's in an industry that makes sense.
Well, on the contrary, numbers can make so much sense, but the product sucks
if you don't understand the tech. Yeah. And that's why I feel like a lot of the times you'll see
why you need both sides.
Yes, exactly. And I think that's where this is powerful, and like learning from each other in that way, I feel like is pretty valuable.
Most definitely.
Again, we see even today, like a lot of Wall Street, sometimes they undervalue the intrinsic value of some of this technology, some of this innovation that's coming out. Again, financially, obviously Palantir's overvalued. Like that's objectively true.
Right. They're valued at the future value that they're going to get out of their products is incurred right now.
Yeah, like they have, they probably have the highest premium on the market, maybe close to it.
Their PEs.
It's like 500 PE or something like that. We'll wrap up on that. At the end of the day, you can't make the decision based on one perspective or another. You got to consider both. And that's kind of what our objective was to do today. And Pure Storage looks good. Again, we didn't go too much into the financials, but next time we'll dive into that a little bit more. All right. So, good stuff, Mr. Torres. You look so...